Dr. Doom, Nouriel Roubini of Roubini Macro Associates saying that problems of India's growth remain a concern for foreign investors, and the Modi-led government should focus on the economy and not get distracted by ideological or religious issues. Listen it.
At the margin, you could argue that economies that are less open are going to be less negatively affected than those that are more open. That's true. But I think that one of the problems that India has faced that explains also part of its recent economic slowdown has been that India has not been as open on the trade side, on the investment, and so on. And part of a strategy that would lead to an increasing potential growth of India would suggest an opening up of the economy to a wide range of interaction with the global economy. So it's true that a country like India, when there is a major global shock, might be sheltered compared to a larger open economy like China or some of the smaller open economies in Asia and other parts of the world. But one of the constraints of India is they need to opening up, because that's going to be beneficial for potential growth over time.
Dr. Roubini, you analyze various economies, in your travels across the world and your course at the New York University. How do you analyze the Indian economy right now, where we are coming from and where we intend to go? It's widely known that India is now targeting $5 trillion mark in the next couple of years, and by 2030, $7 or $10 trillion mark. Would it become challenging for India to remain inward-looking and still achieve that mark? How the pressures of a changing global economy model will play, and how do you analyze our ambition of $5 trillion?
Well, that ambition is conditional on having a growth rate that is 7% or above. As you well know, there's been a pretty sharp slowdown in the last year in the Indian economy. The latest numbers that came out for the last quarter that were published were suggesting a slowdown down to 4.5%. Even the government expected for the current fiscal year growth rate might be at most 5%. And we don't know yet what is the exact number for the fourth quarter of last year and the first quarter of this year. This is going to imply then what's going to happen with the fiscal year. And I think that, while your Prime Minister is a very strong leader, he has been distracted by domestic political issues when his attention should be concentrated on the economic issues. And on the economic issues, unfortunately, the macro outlook is not very great, because you have a large and growing fiscal deficits, and revenues have been surprising on the downside, and that constrains also how much you can spend, given the need to maintain a limited budget deficit. Inflation also, because of a number of factors, has been going upwards, and if there was an oil shock, of course, that's going to be negative. The trade balance and the fiscal deficit will be negatively affected by an oil price shock as well. So there could be further economic slowdown, and the pace of structural reform to increase potential growth has been slower than desirable and optimal. And some of those reforms, even the necessary ones, were botched in the way they were introduced and transitioned, like the GST or demonetization. And the other problem of India is, of course, is that you have on one side both traditional banks and shadow banks that have now a very large number of non-performing loans, and you have parts of the corporate sector where the private or even some of the public ones and the utilities are also saddled with debts. And now there is a credit crunch, and that credit crunch has also been squeezing investment, has been squeezing economic activity. Unemployment rate now is rising, and you've also had spikes in some prices, like some of the foodstuff, onions and others. And you've had also a situation in which the incomes both of urban workers and rural workers have become weaker, and that slowed down consumption. So, as a country with the right macro and structural reform can go back to grow 7%, but unfortunately right now there is a cyclical and structural slowdown, and you have a global environment that is becoming somehow more cloudy rather than less cloudy. So concentration on economic policy is key.
You also like to call yourself as Dr. Realist.
Yes.
Realistically speaking right now, as we speak today, IMF has pegged India growth for FY20 at 5%. We have been much higher before. Realistically speaking, by the kind of measures our government and policymakers are taking, do you think it will be difficult for us to go back? And if yes, how many quarters? Or do you think we may undershoot the 5% mark as well, the pace at which we are decelerating?
Well, for the next fiscal year that starts on April 1st, most likely growth might see an improvement. There has been an easy on monetary policy, even if the transmission from short rates to long rates and then to investment economic activity has been problematic because the credit channels are clogged with bad debts and bad assets. There has been some degree of a fiscal stimulus, but is constrained by lack of revenues, and a budget deficit might become excessive and put upward pressure on long rates. But I would say the policy stance on the macro side may be at least positive. But then I think that the government has to focus itself on at least announcing and having a plan and a schedule for doing a variety of structural reforms, including also cleaning up the financial system and cleaning up the bad debts and the bad assets, because that's going to be a necessary condition for restoring the business sector economic activity. So growth can pick up in the next fiscal year, but at best it's going to be slightly above 5%. I don't expect it to be anywhere above even 6%.
You've worked with various policymakers and governments across the world as advisor. What would your advice be to policymakers who are watching this interaction, parts of the government, large corporates who are grappling with growth issues? They have, in fact, to give it to their due, they have taken a lot of policy measures, including sharp corporate tax cuts, and now the clamor for further reforms is only increasing because the budget is coming. What would some of the specific advice would be for measures to be taken so that at least the deceleration in growth can be arrested?
Well, first of all, I think it's important to maintain a true independence of the central bank that has to decide whether they should be cutting rates or raising them or staying on hold, independent of any political interference. And we see that interference even in the United States. Unfortunately, I think that you need to have a plan for improving your fiscal balances, because both at the central level and the local level, the budget deficit and the debt becomes a problem. You have to have a significant plan for cleaning up the financial system, both shadow banks and state-owned banks and other banks, and also dealing with the bad debts of the corporate sector, private and public. And you have to think about some of the more structural reform, whether it's a labor market or land reforms or things that are going to imply more innovation, more startups, and more productivity growth that are going to improve business and consumer sentiment and otherwise. And the problems of the incomes, stability also of the rural sector, that is a key driver that in consumption has to be addressed. Some of the agricultural policies have implied supply constraints that have reduced the growth rate of both production, agriculture, and the income of the rural worker as well. So there's a wide range of things that needs to be done. I think there is even some degree of consensus in India on what needs to be done. The question is whether there'll be a focus by policymakers on addressing those issues and not to be distracted by actually political things that create political uncertainty and policies uncertainty, and therefore they have a negative impact on business, investment, and consumer confidence.
How are you analyzing the investing environment in India? We have just negotiated a 18-20-month correction in the market, but foreign investors in general have come back, and FDI is also starting to come back, especially in the unlisted side. How do you see this as a market investing destination? Also, you study global premiers very closely, be it Mr. Trump or Mr. Xi Jinping. How do you see Prime Minister Modi as a leader?
Well, right now there's been this slowdown in growth, but conditional on a bunch of policy action being taken, there could be an improvement in the growth rate of the economy. But of course now there are global clouds with geopolitics, oil and other things that could have a negative impact. India has also been a country that has restricted some forms of foreign direct investment, even some forms of financial portfolio inflows, especially in fixed income and so on. So I would say that policies are opening up to foreign trade, foreign investment and foreign direct investment would increase the amount of money would get into India. But I would say that the outlook for equity markets in India and other variety of risky assets is strongly correlated with economic growth, and that economic growth is correlated with macro and structural policies. As long as the policy goes in the right direction, as long as some of the clouds in the global economy do not become severe, you could have a pickup of growth that will be positive also for financial market. And as I pointed out, Prime Minister Modi is a strong leader, is a popular leader, but I think that he's been distracted by things that are not economic into other affairs. And I would say that the focus both of the Prime Minister and the policymaker has to be on the economic affairs, because at the end of the day, political popularity depends on delivering on economic popularity as well. If the economy is going to grow only 5%, let alone lower, that over time is going to erode also the popular support that the Prime Minister is facing. So I would say full-scale attention on the economic issues is key for achieving success.
There you have it. That is Nouriel Roubini talking about his outlook on the markets, where India stands. He believes that we need to open up more on trade and investments in order to counter the slowdown. The Prime Minister should be focusing on large economic issues right now. And he has, in fact, also given his frank view, saying that GST, the introduction of demonetization, as well as its implementation, it was botched up. And right now, India is in the midst of a cyclical and a structural slowdown.